Welcome to Good Money Moves, the show where we share financial tips and advice to help you feel financially empowered. I'm Jenna Taubel, AVP of Marketing here at First Alliance Credit Union. And joining me today is Jaxson Cameron, one of our home lending advisors here at First Alliance Credit Union. You might recognize Jaxson from a previous video. We're so excited to have you back. But we are digging into a different topic today, and that is manufactured home loans. But I'm just going to let you take it away from here and explain. Let's just jump right in. What is a manufactured home and how is it different than a traditional, what you might call like a site-built or stick-built home?
Good question. So manufactured housing is typically in parks, so that the land is not owned, and therefore it's not titled as a piece of real estate. So the title actually just looks identical to a car title, and it's treated as such.
Sure. So instead of having like a solid house on this plot of land that's built and maybe has a basement built into the ground and that whole thing, a manufactured home kind of sits on like a leased lot in a park. So the difference is kind of like, do you own the land that your home is sitting on or do you not, is what I'm hearing.
Correct.
Beautiful. So, and you kind of explained it like the titling of it is similar to like a vehicle loan. So maybe talk a little bit about how that process and that titling really is very different from a traditional mortgage.
Yeah, it's very simple. It's the same piece of paper as a car title. It just says this is a manufactured home on it instead of the make and model of the vehicle. That being said, the closing costs are a lot less too. So typically they're around $635, and that includes appraisal, titling, and everything like that. It's a lot more streamlined, a lot more simple. We don't use any title closing offices or anything like that. We do it all in-house for them.
Awesome. So when it comes to, like, you mentioned leasing the land that it sits on. Can you put a manufactured home on land that you own?
You can, but then it would be deeded as a piece of real estate.
Okay.
And there's a little bit more different costs and different pieces of titling that goes into that.
So there are two different kind of processes. One maybe mirrors the traditional mortgage process a little bit more versus the leased land is a more maybe streamlined process than a traditional mortgage because there's not that true real estate component
absolutely.
built in.
It's just like buying a car. Really the only difference is ordering an appraisal.
Yeah. So are there different types of then manufactured home loans within leased land that people need to consider, or is it all pretty straightforward, like one type of loan? The only difference is whether or not it's on owned land versus leased land.
Correct. So at First Alliance, we can do manufactured housing on owned land, but on our rented land, we have one loan program, but just several different terms on there. We have a 7, 10, 15, and 20 year.
Okay.
And there's limitations with that too, but that's just the one product that we have.
Sure. Yeah, it keeps it pretty straightforward then. It's really just using that term then to kind of control your monthly payment a little bit on what you can afford for that manufactured home. And I imagine too, that there's some other factors that go into being able to qualify for a manufactured home, like, credit score, debt to income ratio. Can you talk a little bit about how some of those factors play into being qualified for a manufactured home loan and kind of maybe compare that even to being qualified for a mortgage? And the differences there? Yeah,
so we hold manufactured housing loans in-house. So that means, we can be a little bit more flexible with as far as debt to incomes, loan to values, things like that. As far as qualifying, ideally we'd like to be below 50% debt to income, and that's just with any product here at First Alliance. But given, each member's story, we can make things work depending on how that goes. As far as the loan to value, we do require a minimum down payment of 5%. So that's one of the minimum qualifications. And then one thing to keep in mind too, if you put 10 or 20% down, it can lower your rate potentially. And then we base your credit score as well off of rate. So the higher your score, the better rate you're going to get.
Sure. So you talk a little bit about down payment there. So it sounds like if you have a little bit more to put down up front, that'll lower your interest rate that you're potentially paying.
Correct.
And can you, for our listeners who are maybe new to lending a little bit, what is debt to income? What does that mean?
So it's your total, we use gross income minus your monthly debt obligations on your credit report. Okay. And things we include in that too that we like people to keep in mind is homeowners insurance, lot rent, and then real estate taxes. So you're still paying taxes on the leased land, however it's significantly less.
Yeah. And then as far as credit score is concerned, I know you mentioned that kind of plays into the final rate. Are there different qualifications for like a minimum score people should be at to be able to qualify? Obviously, the higher the score, the better. So can you talk a little bit about how you maybe help members who maybe are in that kind of like lower score, not, the super low, but kind of that mid score range, who are maybe thinking about getting a manufactured home, but they're not sure if it's the right time, and like maybe what are some of the things that they should be thinking about as they're thinking of purchasing a manufactured home loan?
Yeah, so if your score isn't, 720 or whatever what people would call great or excellent, we don't have a minimum score requirement. At First Alliance, we just kind of take a look at the whole story, and make sure everything just matches as far as that goes, and we can work with several different people with several different situations just because we know life happens. If you do have what you would think is a lower score, the more money you put down could also help you get back to that rate of someone with an excellent score.
Okay. So even if your score isn't like that perfect magical 720 and above score, if you have a little bit more cash up front to help kind of offset the amount of that loan, you can still kind of mitigate some of that a little bit.
Correct.
To kind of show that, hey, I know my score's not great, but I do have this amount to put down, and kind of help just make that situation a little bit more affordable for that member.
Absolutely. Yep. And it shows, that you're able to save up that money, so that goes a long way to show our underwriting team.
Awesome. So kind of continuing along the credit score route, is there a difference in qualification requirements between something like a traditional mortgage and a manufactured home loan?
There is. So traditional mortgages on the secondary market, they usually require at least a 620. Here at First Alliance, we don't have a minimum credit score at all. Like I said, just making sure that everything makes sense for all parties.
Yeah. So if somebody is thinking like, I think the manufactured home route is the way that I want to go, and they've maybe even thought about which manufactured home part they want to be in, and they're kind of getting ready to actually apply. Maybe they found the home that they like. What are some of the steps they should be thinking about taking before they can even move forward with a purchase, before they, what kinds of documents should they be considering that they'll need during that application process? Kind of talk through like that from start to finish. What should that process look like to keep it smooth and clean for that person?
Absolutely. So as far as minimum documentation we require for a pre-approval, we need 30 days of income verification, pay stubs if you're W-2'd. If you're self-employed, we'll need your last 2 years of tax returns, proof of your down payment, and then 2 months of your most recent bank statements, just to show cash flow, making sure there's no other loans on there that might not be reporting on your credit bureau.
Yeah.
And then depending on the value of the home that you're purchasing, we may need your last 2 years of W-2s as well.
Okay. So it sounds like the process maybe is a little bit even quicker of a turnaround than a traditional mortgage application process in some
Yes.
ways.
Generally, we say about a month from origination to closing. And the reason being is that the appraisal kind of takes a bit. We use a third-party company, and it's just dependent on their schedule. So 14 to 20 business days on the appraisal is what we say, but we can turn around a loan in about 8 business hours.
Wow, that's awesome. Hours? 8 business
8
hours?
business hours.
Did I hear that right? That's amazing. Good job.
Absolutely.
Talk a little bit about the appraisal process, because I think that's something that people maybe don't realize is still part of buying a manufactured home, very similar to the mortgage process.
Yeah, absolutely. It's a lot cheaper than a traditional home. It's about $480. And that is part of that $635 that we talked about earlier for the closing costs. That's just a hard cost up front, so keep in mind you will need that and the down payment up front. The appraisal, basically what they do is they just go in, making sure everything's up to code, making sure the HUD plate is on there, which is just the certification for wind bearing and load bearing from the state.
Okay.
Making sure the home is in a good enough condition so it puts the member and First Alliance in a great position. We don't want to put anyone upside down, making sure the home is worth what they're selling it for, so everyone's getting a good deal.
Awesome. So it's really just kind of a protection process in a way, both for the member who's buying the home and for the credit union, to make sure that, should something happen, that there's not, that this isn't like a dilapidated manufactured home.
Holes in the floors,
Yeah.
things like that.
Yeah.
Is mainly what they're looking for.
Excellent. So when it comes to the actual like loan process itself, let's say somebody has submitted their application to us, they're ready to take that step. What does the follow-up of that look like, kind of step by step? When do they get reached out to? What What's the step-by-step process once they've submitted an app?
Yeah, so once the application's submitted with all the required documents, I'll go ahead and get the application worked up, put in all the numbers, and then get it sent off to underwriting, which is that 8 business hour turnaround time. It could be a little bit longer just depending on if there's any questions, depending on someone's specific circumstance. And then once that's back as pre-approved, we'll need a park approval letter from the manufactured home park.
Okay.
And then a copy of the title, things like that. And then we do send out some additional documentation to get the appraisal ordered. Once that all comes back, we will contact our appraisal company, and then they'll call within a week, usually the seller, to schedule that appraisal. They'll come through. They will only deal with the seller normally. And then once that's back, we get a hold of it. We send it back for a clear to close or final review, making sure everything looks good. And then I will reach out again saying, hey, you're final approving, go ahead and schedule that closing. And upon closing too, the seller, whoever's on title, needs to come as well, just to sign off on the title. And that's all they need to be there for.
Awesome. So tell me a little bit more about this park letter you mentioned. What is that? Why do they need it? What's in it? What does it signify in this process?
Yeah, so a lot of I would say every manufactured home park requires a background check, just to make sure there's no criminal history, just to maintain the park and make sure everyone's safe. So that way we're allowed to put our collateral or finance a piece of collateral onto that property.
Okay. So it's really just a designation from the park that says, yep, I vetted this person and they are approved to live here.
Yes, correct. In their community.
Perfect. So what are maybe some of the common roadblocks that you see members running into when they're trying to purchase a manufactured home at any point in the process? And what are some maybe tips you would have for someone who's kind of in this process trying to overcome some of those roadblocks?
So yeah, I'd say the biggest one is not having the minimum down payment. Unlike traditional housing, there's not a whole lot of first-time home buyer, things like that. Certain parks have grants that someone may qualify for.
Okay.
So to get around that, we recommend putting in a savings account monthly and consistently on what would be your payment for 6 months to a year, just to show that that payment is affordable for you, and then now you have a nice down payment to hopefully lower your rate as well. Some other roadblocks would be the appraisal comes back in not so good of condition, or it comes back too high, too low for what they're selling for. So either the seller would need to come down, or we need to see some money down. Or we just maybe need to put you on a different home just to make sure that you're in a nice, safe home for you.
Sure. So the home itself doesn't quite check out.
Correct.
I'm wondering a little bit about lot fees in manufactured home parks. How does that factor into affordability for manufactured homes in a leased community? Good
question. So it all just depends on the community. On average, in our area, it's around $450. There are some parks that are over $800. So just keep that in mind is what I would recommend, and include that in what would be your mortgage payment, just to make sure it's affordable for you, as we do utilize that in underwriting as well. So that's a huge budgeting piece that we would highly recommend for any applicant.
Okay. And kind of going back to interest rate a little bit, are interest rates on manufactured homes comparable to the traditional mortgage market, or are they very different?
I would say they're pretty comparable. On average, maybe they're 1 or 2% higher than a traditional mortgage. Okay.
So what happens once you get to that closing process? What does that look like? What are some of the things that a member can expect to happen during that process? What does that look like?
It's very simple compared to a single-family home or traditional stick-built house. The closing itself takes maybe 5 to 10 minutes. So we'll get you in and out. We just have a couple pieces of loan paperwork for you to sign. And then we'll bring the seller in to sign over the title, and then we'll take care of the title work for the member, and then we'll get a closing gift for them, and they're on their way, and give them the keys to their new home. So awesome. Very simple, very quick. Awesome.
Now, you mentioned the seller. Is the seller typically the person directly selling that manufactured home? Is it the park that sells the home? Do realtors get involved in leased manufactured home sales? What does that look like?
That's also a great question. So I would say it's 50% of the time the seller who has posted it for sale and handling the transaction. The other half would be the park manager. A lot of times parks will buy these homes and sell them on behalf of people. So then the park manager would just be the seller in that case.
Okay.
Lately, we've been seeing a lot more realtors being involved in manufactured housing transactions, but it's not necessarily the large thing, but it does also help streamline things too, just so everyone's in communication with each other. making sure everyone's on the same page.
Yeah. And does that process differ at all if it's a direct seller or a park versus a realtor being involved? Does that change the process at all?
Not at all. Nope. So it just depends on who we talk to, basically. So our buyer will always be in communication, and it just depends on whether we're talking with a seller, a park manager, which we normally would, or a realtor as well.
Okay. Is there anything else that you feel like our listeners should know when it comes to manufactured homes that maybe isn't common knowledge and that surprises people when they go down this path?
I would say the largest thing that surprises folks is that it's treated like a vehicle since it's on leased land, so it is considered a depreciating asset. So unlike homes on owned land, they tend to appreciate with the market. These tend to just go down just like a vehicle. So that's one big thing I would keep in mind. That seems to be a surprise when people turn around and go to sell them.
Sure. So they might buy it for, and this is just a completely made up number, $30,000, and then 10 years later they want to turn around and sell it. It might only be worth 20.
Correct. Yeah, we've typically seen a trend down, just like cars. When you trade it in, you obviously get a lot less for it. But
interesting. I think we're out of time.
All right.
This was so informative. I learned a ton. I hope our listeners did too. And if you have more questions about any of this process or anything we talked about today, I know Jaxson would be happy to talk to you and answer any questions you have. Absolutely. So this has been Good Money Moves. Thank you so much for tuning in, Jaxson. Thank you so much for being here.
Thank you for having me.
If you want to learn more, make sure to visit our website at firstalliancecu.com. Make sure to like and subscribe so you never miss an episode. And until next time, stay financially empowered.